All right. Well, welcome to another episode of Totally Rewarding Chats. I'm Paul here as always. Sean, say hello, Sean.
Hello, Sean.
Yeah, you took the bait on that one.
I did. I can't help. It's a dad joke for an old dad. I gotta do it. Now I can
Gotta
check the
roll with it.
box and I'm good.
Well done. Well, we're excited to be joined today by Zuhayeer from Levels.FYI. Zuhayeer, how are you today?
Doing well, doing well. Great to be on.
Yeah, so stoked that you could join us. We always say so that we don't butcher your own intro. Why don't you tell us a little bit about yourself and who you are?
Yeah, totally. My name is Zuhair. I'm one of the founders of Levels.FYI. We started Levels.FYI in 2017. So it's been a long journey and pretty fun journey. And yeah, would love to kind of share some of that with you all today.
Yeah. So a couple of quick questions just so that we know you're not a robot and you have a human side to you. So the first, not really even part of our speed round, but what's a hobby? What's something you do that's not Levels that we should know about you?
Yeah, I love playing basketball. One of my favorite kind of things is like just going out on the court, just shooting around. And, um, thankfully, and like where I live, there's like a court very close by. So I'll be there a lot of the time, just like in between, like, in big decisions, I like to just go to the court. So, yeah, definitely one of my biggest hobbies.
That's great. I actually love that. Somebody asked me, because I played basketball when I was younger. I don't have as much time anymore. That somebody asked what I miss about it. And I said, I did great thinking in college just while shooting free throws. Like it was a great way to sort of clear your mind and just not focus. So I
Exactly.
totally get
Yeah.
that. Like if you're just like, you need to release, why not? Right. That's awesome. No,
Yeah,
that's great.
exactly. Yeah.
Cool.
Where are you? Where are you? Where are you? Not that I'm going to show up at your court. I don't want you to, I don't want to be like, game on, bro. A little one-on-one.
You're welcome too. But yeah, I'm in the Bay Area. I live in Cupertino, which is kind of the south part of the Bay Area. Yeah, and my co-founder is actually pretty close by as well, and so we kind of work out of here. Yeah, and
Now, wait, is he a basketball player as well?
no, he's not. He's a boxer, actually.
Oh, don't mix those two.
Yeah.
Yeah, so don't play one-on-one with him. Like that's
Yeah, I don't want
probably,
to get one-on-one with
yeah.
him. Yeah, no.
That's pretty funny.
Yeah.
Yeah, because Sean, I don't know if you are a basketball player. I know your daughter is sort of
I was a
high-level
college
basketball
basketball,
player.
yeah.
Okay.
So my entry into triathlon, sadly, was the ACL with rehab being
Oh,
swimming and biking. So actually, one thing that one addictive thing to the next actually is how I would say Zuhair. So
oh
Yeah.
wow, very active guy.
Oh
That's
yeah,
awesome.
he
Yeah.
he makes me look really lazy. That's for sure. All right, so now officially the speed round. So these are just relatively quick questions, top of mind, no right answer except for one question where there is. Just an inside joke. So first, coffee or tea?
Tea.
Tea. All right, good. Iced or hot is follow up, not actually the same question. Or it is the same question.
Iced.
Iced. All right, there we go.
Yeah.
I'm an afternoon iced tea guy, so I like that. You have a weekend free. Are you going to spend it in one of three ways? You got to pick one of the three.
oh, we're up to three.
We're
You're
up
the
to three
first-
now.
You're the beta tester on
I
this
took
new
feedback.
expanded version, Zuhair.
That's right.
Okay.
So your three choices are: you're at a nice resort, you're in the woods camping, or it doesn't matter as long as you're near the water.
Doesn't matter as long as I'm near the water.
Oh,
There we
nice.
go. So this is why choice C
That
matters. So
doesn't make it nearly as divisive. I want to know. So, if you're near the water, Zuhair, would you rather be camping and roughing and enjoying nature, or do you want to be at a resort?
Camping. Yeah.
Oh, see,
Yeah.
now this is going the wrong direction. So the
That is the
long
right
running,
answer, by the way.
yeah,
So,
the long running joke is Sean's a camper. He is a rough it sort of guy, whereas like a down brand Marriott is roughing it for my family.
Yeah.
So like the resort versus camping thing has been a push pull for
Yeah.
many
Yeah, you're right.
days.
I think, with my family, I think it would be different. But you asked me.
I
So,
did. You're right.
it's
I gave you the
so-
weekend. That's
yeah.
true. Yeah, good catch. What's a vacation place you want to get to but haven't yet?
I actually haven't visited Japan yet, and like this is something we actually want to do as a family, and I think it'd be pretty fun. I actually just had a daughter 2 months ago. She
Oh.
just crossed 2 months, and so
Congratulations.
we feel Japan is like a pretty kid-friendly place, and so we're like, okay, we can do like our first family trip, maybe internationally over there.
Wow. It's bold. Maybe it works for a bit, and I know with my 7 and 11-year-old, I can't imagine taking them to a place like that because they barely eat food here, let alone eating food somewhere else. But if you raise them the right way, I guess maybe they'll adapt quickly.
Yeah, I think you
Yeah,
have a window before they get to that age, maybe. So I think it's
yes,
like trying to capitalize on that, probably.
totally. Totally. All right. This is a speed round question with some backup context. So you have a wonderful list of like projects, whether they're side projects or school projects on LinkedIn. And I feel like one of those in your brain is the one that got away. Like there was some unicorn idea that you worked on somewhere in the past that you feel like, oh, that was the one, but I chose levels instead. So like, what's that one project that you're like, boy, I really wish that would have been the thing?
Yeah, I feel like I honestly do feel like Levels was kind of just my calling.
There you go.
But I also think like, there were a number of projects that were definitely really fun. I think one of the more immediate ones that I was working on before like I went full time on Levels was we were kind of working on this way to basically treat Airbnbs as showrooms where you can basically physically advertise products through experiential marketing, which means you're actually using the products. You're kind of like, whether it's like a mattress or like some,
Yeah.
like shampoo or something, like you're actually using the product for a weekend and then you decide to buy it. It was fun because it was like a real world kind of thing
Sure.
where
You can
you're
see it. You can touch
yeah,
it, right? Yeah.
you could see it, you could touch it. Airbnb hosts room, like, it's kind of this marketplace dynamic where Airbnb hosts could basically get sponsored by these companies or brands to bring their products in. It was a lot of fun. I think we were in around 200 homes before um Levels was kind of just taking off on its own, and so I switched over. But it was a fun project and a lot of
The
fond
mattress thing
memories.
is a cool idea. Can you think about it? Like you go lay on a mattress. Either you don't, you order them like based on the TV ad, and no TV ad says our mattress sucks.
Yeah,
Or you go
yeah,
lay down for like 10 minutes somewhere. You can't go to the Serta store and be like, "See you in the morning," right?
yeah, yeah,
Um,
exactly.
it's
Yeah,
such a cool like I can see that for stuff like that where like even just one night, like that's a
Yeah.
good time period. I don't know about the shampoo, like really get the shampoo thing, but like the mattress thing I could wrap my head around.
yeah. I think furniture is definitely a better use case.
Yeah.
Oh,
And
furniture too. Yeah.
yeah,
Yeah.
yeah,
Yeah. Kind of big enough
yeah,
ticket item to you're like, like I'm gonna be on this a lot, like a mattress. This is worth like a getaway. First, it's a getaway where I get to test out this big
Yeah.
purchase. That's a super cool
exactly.
concept.
Yeah, yeah.
So if someone's
Fascinating.
listening to this, did you guys trademark it or anything or, patent it or it's
No,
game?
no. I mean, I think it's up for the grabs. I think there was a company afterwards. I was kind of like, just keeping track of who's in the space. But there was a company afterwards. I think it was called Glimpse or something
Hmm.
that did something similar, and I think they might have had actually more success too. So might already be like might already be happening. But
Kind of a thing.
But
yeah,
Yeah.
to be
yeah.
fair, Paul would know more than me because if it doesn't fit in a small trailer or a tent, that's probably not the target market for Airbnb. So we're gonna say Paul would know better than me.
Yeah.
Yeah.
Yeah. I try not to buy anything. So like if there's sponsored items anywhere, I I wouldn't know it. Well, I'll come back to that because I asked that question for a reason. But last speed round question because I have to ask it: crunchy or creamy peanut butter?
Crunchy.
Crunchy. All right, we're on a
A
string of
run of
crunchies.
crunchy people here.
I love
Okay.
it.
That's because he's in California.
Yeah, it's the Berkeley brands coming out there. Like
Yeah.
crunchy sort of makes sense.
Are you a peanut butter snob or you don't care just as long as it's crunchy? Does it have
Um,
to be like organic? You know?
no, as
Okay.
long as it's crunchy, it's good. Like I just like having that texture, I think.
Okay.
Yeah. Yeah.
Yeah. So I asked the projects question for a reason, which is I see that you've thought about lots of problems. Why levels? So like go back to the 2017 to 2019 era, which I think is when sort of levels was germinated and sort of really kicked off. But like
Yeah.
share the moment and sort of tell us why levels came to find you or what why you decided that was the problem instead of mattress sort of previews to tackle.
Yeah, no, I mean I loved working on kind of side projects ever since college. Like I think And Level started in college. So I was at Berkeley when we kind of came up with the idea. But there's actually a pretty funny story behind how we met. Like, obviously, you know that Zuhayeer, my co-founder, he has a similar name to me. But the way Levels.FYI started was we actually got introduced because our names were similar. So one of my mutual friends at Berkeley, he was from SoCal, and Zuhayeer actually went to school at UC Irvine, and so he knew of my friend who came to Berkeley, and he was like, "Wait, both of you guys like similar names, like." Zuhair, you like to work on projects, and Zahir's working on some cool stuff. You guys should just meet up and just like know about each other. And so I remember the first time we ever met, um, Zahir and I were talking about careers actually, because I was in college at the time. Zahir had graduated, he was in industry. I believe he was at LinkedIn, and he was actually in the market to switch companies as well. And so, as kind of like a college student, I was just asking him about, hey, how should I think about my career after graduating? Where should I go? I was studying CS, so I knew I wanted to do something within kind of, software engineering. And so I asked him, like, what does the market look like? Where do I go to kind of get my career started? And so he obviously kind of like told me a little bit about what it was like at LinkedIn, some of the companies, like the larger tech companies at the time. And he basically explained to me the concept of leveling. And as a naive college student at the time, I didn't know that, there was levels. I thought it was just like you're a software engineer and that's it. Like there's nothing like after that. You just kind of like maybe you get a raise, but you don't really, there's no like structure to it. Naive college student. And Zahir was explaining to me that there's like leveling structures specific to every company. And they actually oftentimes don't even have the same names for the same like for the same scopes and responsibilities. And so him explaining that to me on that first day we met kind of put like a light bulb in both of our minds, because he was also telling me about, hey, I'm in the market of looking for another job, but when I look for that other job, I have to make sure that I'm in the same level, so that I don't get down leveled if I switch. And so, to us, that was kind of like, well, this is clearly a problem. It's not really well documented anywhere. Can we build like a simple mapping to map levels across companies so that people don't have this problem of getting down leveled if they were to switch? And they actually understand like where they would actually be placed or come into roughly, if they were to switch. And these are expensive decisions. Like people will make, like they'll move their entire family. They'll like go somewhere new, resettle, and then they'll find out like, wow, I was placed at the wrong level, and it's a really like terrible feeling to actually experience that. And so, I think that problem really resonated with folks when we first created the site. We basically just had like a few of the big tech companies on there, Amazon being one of them, because I think Zahir had shortly after this conversation, joined Amazon. And so we had like some of the leveling and kind of structures and kind of, I think it's called leveling matrix, where you had the scope and responsibility at these different companies. And we basically manually just mapped them to each other, to just come up with like a really rough mapping. And that was what Levels.FYI was in the very beginning. And that's where you get the namesake from as well. We just did leveling. Salaries was not even in the picture. A couple years, like I think around a year later, we realized that salaries and compensation also pegs to level. And so if we collected salary and we already have this rich data set around leveling, we can actually collect much more accurate salary ranges for different companies. And so that was kind of like another light bulb moment for us. And but that's essentially how we got started. We were really just solving that problem of comparing levels, which were so different. Like if you look at Microsoft, it's like 59 to 80 or something. And you compare that to Google, or you compare that to LinkedIn, for example, all very different nomenclature. There's all sorts of title inflation. So, I think some companies will have senior much sooner than other companies will. But the scope and the responsibility of that senior level role actually maps to a more mid-level role. And so, just understanding the mechanics of this was just kind of like a fascinating
Yeah.
experience, and that's how we got our early traffic.
Yeah. No, and I know you know this story, but when I was in house, right, I stumbled upon levels when my engineers were finding levels, and it was
Yeah.
after you had gone beyond just the sort of level mapping and started adding comp, because that's when I started getting on the practitioner side that, hey, look, at Amazon, a senior engineer makes X. Why don't I make X? I'm a senior engineer, right? So I joke, like I hated it at the time because it sort of was shining a light on sort of thing. You were bringing transparency to a market that at that point wasn't particularly transparent, right?
Right.
So I guess I'd love to dig in on that topic, right? Like there's a point at which you decided to start adding pay to it, but it wasn't easy to find. Maybe it was just starting, like what an Amazon engineer was paid. So like talk about the
Yeah.
evolution into pay, because now I think people attach you more as a compensation sort of platform than a
Yeah.
just job lifting platform. So what was that natural evolution into pay, and how did it feel to sort of get into the pay transparency world?
Yeah, no, absolutely. I think the natural evolution, I mean, we were pushed like by our users into this direction. Like it was very much like people would come and say, why don't you just add pay data on top of this? And so our natural kind of and this is kind of in um I guess uh just inherent in our culture at Levels.FYI is we like to do things, start very simple and then kind of build muscle around it as we go. And so one of our famous stories is, we basically just created a Google Sheet to start collecting salaries. It was actually a Google form and a Google Sheet. And so we just tacked that on. We added like a link where you can kind of submit salaries, and then you would basically be able to just view the whole spreadsheet on our site. And once we realized we were getting some sort of critical volume, we realized we can do some processes on this where we can actually aggregate data by company, by level, and actually make it more useful. And so overlay it on top of our current site. And so that's when we started adding more functionality on top of the sheet. But we were powered by the sheet for a good amount of time, where the sheet itself was our backend. It would be all the data living there, and it would basically power the rest of our site. Um, and I mean, more recently, obviously, where we have like a real database, but Google Sheets is still like a big part of our workflow just because people are so familiar with it. They know how to use it. It's,
Yeah.
it's just like a link you can share. And so, like that was kind of like one of our most famous stories is that we were powered by this like Google Sheet for so long. But that's how we connected it originally. We
Yeah.
had pay coming in from individuals just filling out this form. Obviously, it wasn't super robust, but over time, we started to bring that form onto our site, add things like autocomplete, simple checks. And, I think over time, one of our biggest concerns was just the validation of our data. Already being self-reported, I think you get this bad rap, like, okay, like data is self-reported, so it's not reliable. And so, we started to take that very seriously. And today we kind of have like this multi-tier approach to how we verify data. So individuals can obviously anonymously submit data, and that would be like the lowest tier of weight today. But we also have this mechanism called proof of identity, where if you're to verify your email, your corporate email with a company, and you were able to, let's say, you were at Amazon, it's Paul at Amazon.com, you verify your email, we know that you work at Amazon. And so if you were to submit a data point specifically for Amazon, we would give it a little bit of a higher weight because we know that you have your corporate email
Yeah.
verified. And then, we have like a few other layers, and we go up to basically proof documentation, where people can actually submit documentation for their data point as well. So this would include things like, a tax document, an offer letter, pay stub, anything that would substantiate your data point. And all of this kind of goes through, even today, like manual review with our team. I mean, with the assistance of things like AI to kind of help highlight things for us. But our data operations team actually goes through this data to ensure that we are like verifying this information and giving it the highest tier of weight, only when we know that we have
Right.
validated it.
Yeah.
And so, even from early on, we were kind of thinking about this because we knew that, with self-reported data, it's very easy to just get spam, and we didn't want to incentivize the wrong thing. And so, one of our core kind of beliefs from the beginning was we actually don't want to incentivize the submission through gating access or through some sort of like, hey, you get something if you submit a salary, because the minute you provide that incentive, people are going to start submitting whatever to get that, right? And so today it is still a very much altruistic, community driven website where people really
Hmm.
come to kind of pay the site back for the help that they might get for negotiating their offer. And it's really an altruistic kind of ethos that really drives everything. And we think that is kind of like our superpower, because ultimately, if we were to gamify it, there's always going to be some sort of something that rigs it the wrong way, and we
Yeah.
don't want to do that.
Yeah. It's a long like feud between, most of our listeners are rewards people, in-house comp folks, right? And the sort of self-reported data, what is it worth? What is it not worth? Right? And it's got a
Yeah,
bad rap. I think you're right? Like the reputation isn't great. Just because what can I trust? What can't I trust?
right.
I think you're describing a method, and go ahead, Sean, but as you're describing a method that clearly is different than I think most would assume is attached to sort of self-reported data. But Sean, it looked like you were
I
ready
think
to
there's a
chime
little.
in
I
there.
think there's
Yeah.
industry bias. So I don't come from the industry originally, Zuhair. I mean, I've been in the industry a while, but as it's
Yeah,
come up, I think where it comes from my perspective, was most employees know their base pay. Fine.
right,
Probably, to be honest, better than the person who, because I've always had this thing where the salaries that are submitted, it's not super popular to say it this way, but it's usually the lowest level person nobody likes at a company, right? That's who is submitting the compensation data, right? And they don't actually know the roles and what they're doing. So the job and the description, right? And so the fact that that's perfect in my mind has always been wrong, because it's like, they're getting the data for it. And now you're asking them to do the leveling, like for a software engineer, but they're in HR. And we have found several that have come from comp that are from engineering. But like, to know everybody's role in an entire company at Amazon, no chance, right? But
right,
so I do think from like the self-reported data, your salary. That number is probably spot on. I mean, if you ask people what they make, that's the number that comes to mind. Then I kind of crawl up this thing of like, okay, now let's talk about the data. Well, what's your bonus? Well, they can kind of tell you what it was. Most people probably can't tell you the structure or what it is, or don't care, right? They just wait till the check. What about long-term incentives? Well, people are like, I got,
Yeah.
5 million shares. You're like, okay, well, what does that mean? Like, without the cap table, without other stuff. And so I kind of worry more as you go on that. I think the validation is great, because I don't have a problem with it. I actually think there's some super cool data that can come from self-reported data, like how far do people drive to work for X amount of salary? Like, that's pretty freaking cool, right? So there's some cool stuff that comes from that.
Yeah. I think I want to go there on the non-salary part too, because Zuhair, I mean, a good chunk of Levels business is coaching candidates, essentially, right? It's not sort of
right.
employer centric. It's, helping those in the market manage that. So I guess how would you see that? I mean, you and your team, not you yourself, but you and your team talk to lots of candidates. Like, how would you
Right.
describe the fluency with pay, right? I,
Mm.
I I think I
Yeah,
think Sean's probably, I would agree, but I'm curious what you hear. And it's a tech
yeah,
centric audience. I just want to qualify that. Like, I don't think you get as many outreaches from
yeah,
sort of Midwestern manufacturing,
yeah,
corporate
yeah,
people. But
definitely.
but
No,
I
it's
guess how would you describe it?
definitely
Yeah.
no, it's definitely we're centered around tech, and I do think there's just a little bit more interest in like understanding your pay. Like I think here, especially when it comes to those incentives, like longer term incentives, stock, things like that. I also think like one of the things that I mean, it's our business to get it right, really, is, with the negotiation service, like that is kind of what started off like a lot of our,
Mm.
the paid offerings that we had for candidates. And it's still like one of our flagship, offerings today. We have a coaching network that helps, candidates basically increase their job outcomes, and and we put our money where our mouth is. Like, if we don't actually increase your offer through the service, you get your money back. We still learn kind of some information on the ground because we're helping you. But it's our coach's job to really help you understand your offer before you send it. And so, as a part of the data that we collect, we actually get information from the ground, from these coaches, from the offers that these candidates are getting, and part of, like, understanding those offers, or understanding like the full picture. Like, what does your equity structure look like? What is the bonus payouts? Are you getting sign on? Are you getting relocation?
Yeah.
Are these elements negotiable?
Yeah.
More importantly, right? And I think, one of the things that, we were, I think, on the forefront on, was like finding out the front loaded vesting kind of
Yep.
trend in the industry. And a lot of it was because of credit to our coaches. They were the first to identify this because it's coming in, and to help communicate and educate our, like, customers as well, to ensure that they understand that their offer is, yes, it's high in the first year, but it's not going to be high in the last 2 years. It's not going to be as high in the last 2 years unless you get those refreshers. Communicating that and educating them was like a huge part of,
Hmm.
like, getting understanding around, like, people's offers.
Yeah.
And I do think, there's been a lot of innovation, I think, around equity and just structures around vesting more recently. And I think it's going to continue, probably just because of the competitive nature we're seeing, where, like, a lot of companies are now switching their models over to some sort of shorter or front loaded
Yeah.
vesting schedule. And yeah, and I think education is a big part of what we do, because, like you said, Sean, like, I think a lot of people don't know what the structure of their kind of pay even is. And so for us, like, if you actually, like, fill out our form, a lot of it is education as you go. Like, hey, like, for your equity, like, you may have a number, but you actually, for yourself, for your own benefit, you should actually not just know the share number. You should know, like, what that is relative to the rest of the organization, right?
Yeah.
And so explaining a lot of these things to our end users, and not treating them like as, hey, you're just dumb. Like, we know they're smart. It's just like, we just have to help them get the information they want, right?
Yeah.
And so part of our job is just educating them about, like, hey, what are these things? How can I ask for it? How can I get it from my employer? And make sure I'm making the right decision for myself, right?
Yeah, that's one. The equity vesting was one. I think I shared. There was a particular infographic. I think it came from your sort of LinkedIn account that just showed that in a waterfall version, like, this is the change we're seeing. Right, gone are the days of wait a year and now it's quarterly, or wait a year and now it's monthly, or really gone are the
Right.
days of annual vesting. Now it's front loaded with this decreasing scale. That was the first time I had seen it. And I think about this all the time, right? So, like, the candidates picked up that trend before the rest of the data picked up that trend,
Right.
in my opinion, right? So it's interesting to see, like, what you can learn and what you see as sort of innovative practices.
Yeah, and I think
Yeah.
that the thing with being on the ground is you can kind of see a lot of these things in real time. And what's cool is you'll see, like, companies even iterating or experimenting with different things. Like, I think Google had many different front-loaded investing schedules before they settled on the one they have today. And so they were actually trying this out in different ways. And I can imagine the change management on that is probably crazy, but it's it's just like they have the scale to be able to A/B test offers,
Yeah.
because they hire so many folks.
What were your coaches hearing, or what were you hearing? Like, let's use the equity change. Like, how did the market feel? Like, how did candidates view that? Like, I'm sure it was a re-education. I imagine the
Yeah,
first few candidates that got it are like, wait a minute, is this wrong? Right? This is
right,
totally different than what Amazon used to do. Why is this happening? But,
right.
like, what's your pulse of the talent market? Like, is this seen as a welcome trend, a bad trend? Like, how do you think they view it?
Yeah, I mean, I think, to like, I'll give you my perspective. Like, my perspective on it is, I do think this is kind of like a reversion to, performance driven kind of compensation. And you're not getting, like, your whole grant is smaller. So the amount of money that you're promised with that stock grant is overall smaller. It's just that the first year has a higher weight. And that may match what you got with the original 4-year kind of vesting. But what it means is that you'll have to have some sort of indicator, whether that's performance or whether that's the company doing better or doing well, to get like the refreshers that you want to be made whole again, right, for the latter years. And I think for candidates, like that's like, that could be a mixed bag, right? Like you're not getting that 4-year upfront grant. And what that means is you're also getting those, the refreshers that come in, they're repriced, right? So they're repriced on from when you get it, meaning you're not getting the value from the very beginning if you're looking at like an initial grant, right?
Yeah.
And so I think it depends. Like if you're one of those folks who are like, hey, you know what, this first year salary is good. Like it's a strong start. I want to perform and I want to join an organization where I could have this impact. And I'm bullish on the direction of this company. Like that's probably still a great opportunity for you to actually, like I think Meta now announced you can get performance bonus up to 300% of your target amount, meaning like they really do want to reward kind of high performers. But of course, I think for folks who want to join like a startup very early, you want to maximize your equity when you're very early. And so I think for folks who want to have that, hey, I want to have like a lot of equity from very early on, I don't know if it's the best,
Yeah.
policy.
Yeah.
But being clear about that and the expectations around it, I think is what we're trying to do, even with employers, right? Like employers, and my belief is that it's, there's probably a decrease in expense that like upfront, you don't have to spend a lot on SBC with kind of these grants,
Sure.
especially if you're looking at single year, double year grants. So now there's also like a slate of companies who are just doing single year equity grants. And so they're not even giving you like anything for the latter 3 years. And, they may promise things, but once again, they're promises. So you have to hold that word to whatever, however, like if you're a candidate, you have to price that in somehow, right?
Yeah.
And I think like for employers, yeah, it's like you spend less upfront on stock-based compensation, and you can reward performers with much more than you would reward folks that you may even want to push out. Actually, maybe you don't want them at your organization, and this is just a software you can kind of push them out because you're not refreshing.
Yeah. You don't know
Yeah.
the
Or making them
overhang.
I was
hang,
more
but
fascinated when I saw some of that stuff that the total grant was the same or less, because in my head it was always like get them to drink the Kool-Aid and hook them, right? And so now they're there, and now there's just too much on the table to leave, right? But the
right.
fact that the number was kind of the same, the math worked out different. There's a lot of good for the company involved in that, and then of course, just like merit at some level, it's like you come around to the refresh, it's a cool way of saying, stock merit, basically, in my mind. I'm
Right.
a simpleton, right? Like you come around
Yeah.
to year two and you're like, you're not a great performer. Your refresher is, lower. And so now, you have kind of the same premise of how merit works, well, they'll probably won't stay. They'll go look for something else. So I think it's a really cool, like there's some cool stuff going on out there. I was always interested,
Totally.
you guys were kind of ruining you were ruining the innovation by these companies, right? Because basically you're like, we have this cool new thing to get people to come that's going to be great for us. And you're like, well, we're going to share it with everybody. Congratulations, right? Like I thought
Yeah.
that was great for the candidates, but it was like, Google's doing all this testing. They're like, we're going to A, B, C, D test all this stuff. This is what works best. And Levels is like, yeah, it does. Here you go. I thought that, so
Yeah.
I was kind of curious, have companies pushed back at all on sharing that stuff? Because, the interesting thing in policy and it with data submission, right? Companies are always in this weird thing. We want everyone's benchmarking data, but we don't want to give ours, right? That's just the whole world
Yeah.
works that way. So how have you seen companies react to some of this?
Yeah, I think companies have actually been very interested. Like it's interesting because I think not everyone can A/B test at the level of Google, right? And so companies rely on market data. They rely on other peers, other folks that are doing this thing to really understand what's going on and how they might want to shape their offers and their structures. And so they actually naturally come to us. They'll come to us and be like, okay, what are my peers doing right now, and what are they experimenting with, and how should we be thinking about equity?
But that
And
begs
so
the
that's
question, have you seen the innovators be not so stoked about it? Because if I'm the laggard, right?
yeah, yeah,
Actually, I'll just wait and see what pops up on figures because they're gonna A, B, C, D test it, not have to do with the crack. I'll
right,
wait for
right.
the winner. Like, have you seen any pushback or are companies like, that's just the way it goes?
Yeah, I mean, I think it's I haven't personally seen any pushback on this like aspect. I think there's maybe other things like um perhaps like some benefit that we like make public that isn't our, but there's I think the pushback here, like I haven't really seen it. It's more like, I guess we also are not really talking to the Googles, so like I don't know if I have a line with the person who made Google's
I'm sure they would
decision.
have found you. Don't worry. If they were too
Yeah.
upset, they could have found you. So that's
Yeah, exactly. Yeah, and I don't think I think we have a number of customers who are, like, I would say, some of the pioneers in the space. And I think if anything, they've still used levels as a way to kind of like a scratch pad to kind of understand what the market still looks like, and how they could still be competitive. And even if they were the first, they still wanted to make sure that their first year, like total comp, is beating out like whoever they're kind of
Yeah.
peered against. Um, yeah, and I think it's, I mean, I think it's also just interesting. I think comp folks generally find this like fascinating, like where anything shifting like around comp, they just want to have that information. Um and yeah, I think this is a good segue to kind of some of our B2B offerings, which I think that's been one of our major growth levers. Is we've kind of we started with individuals, but we've now kind of grown to kind of support organizations as well. And I think part of it, obviously, we have like a benchmarking tool. I think, Paul, we've chatted about this a
Yeah.
little bit. We also now offer interactive offers where, you can communicate these changes in your offers to end candidates. And so front loading vesting being, one use case you can kind of use interactive offers for. And then I think one of the things that we're adding to our benchmarking tool now is we have this module called competitive intelligence. And this, I think this has been like one of the areas that, once again, we were pushed in this direction. It's almost like we did not even have any clue about how valuable this would be, but essentially, what I mentioned around our coaching network, we actually had an internal wiki where our coaches can kind of exchange notes about what's going on in the market. And so at a per company level, they would take some notes, and write down basically different practices for compensation philosophy across different orgs. And they would use it to understand how they can best negotiate for their end clients. But what we ended up realizing was we pulled one of these reports and found that it was completely invaluable for one of our benchmarking customers as well. And so we actually turned this, like what was originally like an internal wiki, into a competitive intelligence tool that our benchmarking customers could use. And this is where you can find out, specific pay practices by organization. And this is where, the utility of being self-reported kind of
yeah.
shows up, is
Yeah.
that we don't have to anonymize or aggregate data at like a broad level. We can give you a per organization kind of idea of how compensation and compensation philosophy works at like a particular company. And because you're not contributing your data to us, like, it's kind of, there's not really, we don't have that barrier where folks kind of think twice about, hey, do I really want to give these guys our data? There's no data required. You just can come and you can
Yeah.
view, like, if we have your peer data, we have it.
Yeah. It's part of that new frontier. It happens with posting data too, which, is not in the levels like data set today, but like scraping postings. Like you can zoom in on a
Yeah,
company and say, this is what,
Yeah.
This company is posting, and not necessarily what they're paying, but they're posting for these
right.
types of jobs in this place, right? So like the safe harbor barriers are sort of just different when you're talking about data sourced from different places. There's pros and cons, of course, but I know when you showed me that, I had a OneNote folder many years, like with a different thing for every company that we tended to compete for talent with, and tried to do the same thing within a company. But this sort of operates that at scale, and I do think that like that level of competitive intelligence may be the future of a comp professional, right? So it's less about brute
Right.
force benchmarking and more about like, how do I convince this candidate that this is the place to be, or convince that employee that that's not the place to be? And more of that's going to come down to, yeah, but here are the trade-offs. And being educated on those trade-offs is difficult if you don't have a source of information. And
Yeah.
it's
I even
uncomfortable. I
think
think I think I likened it to, it's like you go to the nude beach and you're not allowed to just stand on the sideline, right? Like
Right,
this level of transparency and openness is here. Um,
that
but that's how
escalated
you got to
quickly.
compete to tell the stories now.
That escalated quickly. I was going to, I, I, in benefits in particular, like some of that stuff, I think what's interesting is that you could bring to the table is you've got a coach or somebody or the company submitting their benefits. I actually think self-reported data in the benefit space is super cool because what you think you're
Yeah.
getting, the employee, they might be wrong. And I've always said it with benefits in particular, you're like, but I want to know how they're wrong, because if the company there and they're like, we have crap benefits, and you're like, we benchmark in the 90th percentile, like that might be
Yeah.
true, but what the employee thinks they're getting
Yeah.
is actually the most important thing in that. Is like, do they think there's value there? And that's a gap that you would want to know. And there's huge value there because benefits are escalating at such a higher pace than wages right
Yeah.
now.
Well, and
Like
Yeah.
that's
I
the
found when I
cool
was
part
in,
of this. Like self-reported data to me has always been kind of gotten the knock, in some cases right, but there's some very cool use
yeah.
cases for companies.
Well, and even like benefits is a good example where there's a shocking number of companies who publicly have available all their benefits information. You just got to know the link, right? And
Exactly. Yeah.
it's it's as good as search is. You're not necessarily going to find the right link. Whereas once you've heard from a candidate, oh, it's benefits dot insert name of company.com, right? Now you know where to go and you can see what the contributions are and how the plan is working. So like just access to the site is the hardest part. And once you've got it, that's a benchmarkable data source. It just saves employers a lot of time if somebody else has done it, right? I had to do it. I was doing it myself years
Yeah.
ago, and it was
Oh
time
man, and
consuming.
AI on the SPD, once you have that, it's going to be rock stars, right? Like you're going to be able to create that delta pretty quick, right, on the summary plan. Like
Yeah.
there is some really cool, like that to me is really important. This, there's always been the actual, and I'll say comp spin in that box of like we've got the black box and we know the number,
Yeah,
but now there's this like, well, does the employee value it? And what do they actually think they're getting in this is
Yeah.
super cool.
yeah,
Yeah. I always found benefits very interesting because once you like for salaries, I think there's a lot of variance compensation. But with benefits, if you're looking at a particular region, it's pretty much standard. And so you need one contribution, like on a site
mm,
like ours, to get the whole picture, kind of, right? And then and so yeah, I think benefits has been very interesting. We've actually done like benefits benchmarking, and I think it's still kind of like a beta product that we have where we help organizations look into particular benefits and kind of compare.
Yeah.
Um, but it's definitely been a very interesting space because of that. Like you can kind of just collect the whole packet if one person's willing to give that to you, right? And or like you said, Paul, it's just online somewhere, and you just have to
Yeah.
find where it lives.
yeah,
And yeah, and I think I think if you go to like we have a benefits page, if you go to Levels.FYI, you can kind of just view the high level, I think, on our site as well.
yeah. We'll run out of time shortly, but I have one more sort of interesting question I want to ask. Since you spend so much time with candidates, like one of the big debates with candidates was around choice, right? And some companies pioneered well, you can have this package or have that package. Is that is that increasing? Do you see that? Was that an interesting experiment and went away? Like, what's your view from the candidate? Like, how is that going, and how are candidates viewing choice when choice shows up in an offer?
Yeah, I think I mean I have yet to see this at a larger scale,
Yeah,
mid stage upwards. I think we see this a lot earlier stage and into mid stage kind of companies. And we'll see, and this is also something we support on interactive offers, because like one of the biggest things that some of the earlier stage companies asked for is how can I create this function of trade-off between two components of compensation. And so I think early stage, it makes the most sense because equity is so, it's harder to value. It's like each candidate will have their own kind of formula for how they might
Yeah.
value that
Risk
equity,
profiles are so
their
different
risk
at that
profile.
stage.
Exactly. And so if you're just optimizing for all cash, then, that's what you're going to go for. And maybe you give like equity a certain percent discount, and that's how you compare it to cash. And so then your formula is a little different. And so I think just providing that optionality allows candidates to take on their risk profile, right, for how they
Yeah.
want to receive that offer. And I think the other place I've kind of seen it is maybe in sales and kind of commission-based structures where
Sure.
you have
A mixed
maybe
trade of some
a
kind. Yeah.
mixed trade of some sort, like, with OTE and things like that. And so for that, we also we kind of made the module flexible on interactive offers where you can just exchange out two different components and you just give it
Yeah.
the function or how much you want to, maybe 3x, like
You're
the,
creating,
yeah,
you let them create the currency, the exchange rate, basically
exactly.
the module exchange rate. Yeah.
Yeah.
Yeah. And then now the candidate can look at every version of their offer, right? And kind of see how that kind of stacks up.
Yeah. Yeah.
Yeah.
Your answer confirmed what I've said, but I would admit I actually don't have great data to prove it, which is like it feels like something that happens more, mid-market down, right? Sort of late stage, but certainly once you reach like an enterprise level, I hear lots of people talk about it, but not
Yeah.
a lot actually sort of
No,
do it, right? And try
Unilever
to
did it a
scale it.
couple years ago where they tested base pay and short term incentive,
Yeah.
and basically, you could trade in. It was in the UK. You could trade in basically 25 pence on the pound one way or the other, and about half the people just said, "Screw it, it's fine the way it is. I'm fine. I don't want to
Yeah.
mess with it." And then about a quarter of the people said, "I'll take more risk,
Yeah.
for more upside," and others took base, and it interestingly fell more along age because obviously, and role level, because if you got bills to pay, you got bills to pay. You're not worried about wealth generation. You're worried
Yeah.
about feeding
Yeah.
yourself and having a roof.
Right.
It kind of was very explanatory around that. But they didn't ever, that I know of, delve into LTI or anything like that,
Right.
allowing you to really mix and match. It was kind of a 1 year at a time, multi-year experiment.
Yeah.
Yeah, that just reminded me. I think there was also Spotify who had experimented with this. And then even to this day, Netflix. I mean, Netflix is famously all cash, but I think they have like an ESPP program where you can trade in some of that cash for it. But it seems like most people just try to, like, generally will take all cash, um, at least from the reports that we get on
Yeah.
levels. So,
Yeah.
but it's definitely, I think, that flexibility. I do think behind, like, if you go to the executive level, behind, like, those are a little bit harder to get
Sure.
visibility on.
Sure.
There's definitely more, I think there's definitely more optionality there, where, and I don't think the optionality is like, rigid either. It's not like a scale that the employer provides. It's like you kind of are actually negotiating on these levers.
Yeah.
And so I think I've seen it there, like through our negotiation service as well, where
Sure.
some things that we didn't even expect to be, malleable ended up being like, hey, we could actually shift this around.
Yeah. Interesting.
And yeah, and I think it's like those two kind of corners of the world. It's like a little bit earlier stage and,
Yeah.
like higher level, like more autonomous roles. You kind of get some of that optionality
Sure.
as well.
And I know we're going to be out of time, Paul, because I'm dying to die into that on pay equity.
I
But
know that's yeah. It
there,
was sort of a leading question that we'll want to pick up in a future episode, and I appreciate you seeding it a little bit, Zuhair. But like, I do think choice is the enemy of consistency, like
yeah,
by
Right.
definition. And how do you tackle that? Particularly as you mentioned, Sean, like if the trend was older workers tended to pick it this way, that's not going to explain well if the women tend to pick it this way or the men tend to pick it this way. Like that's not going to disclose great in a
Right.
global
Yeah.
environment. So it doesn't make it wrong. It just means it's a different challenge for a different kind of
Yeah.
company.
Yeah.
And that's why I think we'll continue to see it be, if I'm a Series B US only company, I could make
Right.
some different choices than if I'm a global 5,000 person company that needs to
Yeah.
disclose the differences in pay between men and women in the UK. Like that's going to be a different,
Right.
trend line
Right.
probably. I know
Absolutely.
we're going to run out of time. So, Zuhair, thank you. Since you sit at the fulcrum of sort of company and candidates, pick one friction point to close us out. Like, what's the one thing you would fix sort of in that candidate experience if you could magically fix one friction point?
I think, like Sean, you kind of touched on this a little bit earlier. I think one of the most confusing things for candidates is early stage equity. Understanding early stage equity I think it's just frankly difficult because it's also kind of a hidden science. Um, it's not super transparent
Yeah.
depending on the company as well. Like,
Yeah.
and I always like everyone we work with, we encourage like, hey, you have to be transparent. Like we have some base rules, like when like you're using interactive offers, and we've actually turned down customers for this, which is, like we had to make that choice. Like ultimately we have to show you your strike price. Like we're not going to not show you the
Yeah.
financial burden that you incur as like a candidate, right? And
Yeah.
a lot of the time, like I feel like candidates will enter into these offers and they don't know that they have to financially exercise to even get that equity.
Or they have,
Yeah.
you hear people say, I think that's great. I can't believe I've got more shares here than I did at the last place. Well, who cares?
Yeah.
Like that,
Yeah.
like I don't, there's a lot more math. So are they not sharing the most
Right.
recent, mid-stage 409As? Are they not sharing cap table? And a lot of times you're like, it's just this. Even when they share the strike price, you're like, I don't know what that means. Like,
Right. Right.
so I think that's great. I think that's a great example of, transparency and, creating value.
Yeah. No, absolutely. And I think this just I think it's just been this kind of hidden thing. And the more we can bring it out into public, I think the more it'll encourage folks to also be like, hey, this is all these aspects are things we have to consider. And um, the other thing is like, even just looking at the probability distribution of how many startup shares go underwater, it's like most of it, right?
Yeah.
And so like, how do you price that in to your offer, right? And instead of thinking, oh, I'm rich already, like
Yeah.
you have a long way to go, like it's
Yeah.
Yeah.
yeah, yeah,
Yeah. Well, thank you for your time. We try to keep this sort of
Sure.
at a good length for our listeners, but I think it's always interesting to hear a different side of the market, right? We're like these deep comp insiders and kind of getting a view where you chose this as a fresh problem to sort of bring different transparency to the market, I think is a fascinating take. And you get a bird's eye view for sure of some interesting change trends. And it was good to hear your
yeah.
perspective. So definitely thanks for joining us, Zuhair.
Thanks so
No,
much.
no, I appreciate you guys. Yeah, thanks for having me.
Yeah. Thanks, Zuhair.